What do you get when you hold a swing trade overnight, risk 2%, and let it roll straight into NFP on a prop firm account with the strict daily loss rule? Yeah, not exactly a textbook move. And somehow, I still thought I'd be fine. Let's just start with an update with where I am on my Blueberry account. At that moment, I was down 2% and I was risking 2% per trade. Let's go over the trade and why I took it. Let's start with the COT data. You can see here I'm on Edge Finder, which is the software that I now use to look at the COT data, and it also tells me retail sentiment. Here I can see the retail sentiment for different pairs. It also gives you the ability to look at economic data. For example, I can see all the latest US data and I can see if the impact is bearish or bullish. So I was deciding to take a trade on USD JPY. To look at the COT data, I'm going to look at the USD data and I'm going to have to look at the JPY data. Let's ignore this July 7th because I didn't have it at the time. The only data I had to work with was from June 27th backwards. What we can see going forward is the net change in the US dollar was minus 4.21% and the change in long contracts was 68, but the change in short contracts, this is the bit that interests me, was 3,134. Week over week, you can see that shorts are increasing on the COT. The COT is basically data that tells us where the hedge funds are positioned and it gives us their latest changes in position. I'm looking at the non-commercial data because the commercial data is not as important. That's to do with companies and hedging. I'm more interested to see what the institutions and the hedge funds are doing. As you can see on the US dollar, the hedge funds are 59% short and 40% long. But as you can see, the biggest change is that there's been a big increase in short contracts and not that many in long. The US dollar is very bearish according to the COT data. That means that I'm most probably going to be shorting the USD JPY. But now I need to look at the JPY data just to make sure that we're all in alignment. I look at the JPY data and we can see that the net change is minus 0.24. There's been an increase by like 1,400 of long contracts compared to short. So overall, we're expecting an increase in longs. As you can see, the hedge funds are heavily positioned 79% long, and you can see that the net position is 132,277 contracts to the long side. So this is good because if a JPY, according to this data, is long, then we want to short USD JPY. This is a perfect confluence for me to know that shorting the USD JPY is probably a good idea. So now let's look into the technicals. Looking at the order flow, you can see that we've got a high, and then we got a low, then we got a lower high, and then we got a lower low, now we got a lower high, now we got a lower low. My technicals are now telling me in terms of market structure on the 4-hour time frame, because I take most of my trades on the 4-hour time frame. At the moment, we are very bearish in terms of the 4-hour. I pulled out my Fibonacci tool. I want to take my trade somewhere between the 62, I call it the golden zone area, this area here, because it's the 79, 71, and 62. I had an idea of where I want price to go. You can see that we've got a fair value gap over here, not the biggest one, and then we've also got a big fair value gap over here, which price has gone through. Looking at this trade, if I go down to the 1-hour time frame, you can see that price is starting to stall a bit. And this is what I like because price stalling means that now I've got a little bit of inducement here. What I decided to do was take a trade, a short position. I took the trade roughly around here. My stop loss was about there, above this candle, and I was targeting the low, something like this. So as you can see, my stop loss is 39.7 pips. Not incredibly large stop loss, but also not a really small one. And then we can see what happened. You can see that we entered the position and right off the bat, there was a big rejection. So this is good because now I'm in profit and I was risking 2% on this position. It was Wednesday, the 2nd of July. We entered the position at 11 o'clock. The problem is that because of the US holiday, which is on the 4th of July, NFP is supposed to be on the Friday, but this particular week, NFP was actually on the Thursday. When we end the day, I'm in profit. We ended the day round about here. I'm in about 1.39R profit, which equates to 2% times 1.39. I've been locked in at profit around here. On my Blueberry account, this is where my equity is. My balance would have been 98,000, but my equity is going to be a lot higher. The day of NFP, I decided, right, I'm going to move my stop loss to break even because I don't want any funny surprises. This big news candle on NFP rocketed through my break even, and the slippage was so high that I basically got taken out somewhere around here. I was probably about 2.78% up, and remember I was risking 2%. By the time this thing closed and it slipped me, I was now at like 4 point something% in a loss, which just losing this position would have been a 2%. But because of this equity rule, now I've lost 4.7% in a day. I was actually trying to minimize that by putting my stop loss at break even, but I was silly because I should have realized the slippage. I didn't expect it to be that bad. I mean, the slippage was something like 25 pips. I will put the screenshot up on the screen now so you can see the exact place that it took me out, and we can calculate the slippage. I'll write down the slippage there, but it was some crazy slippage. I was very lucky because when I saw this candle and I looked at my MetaTrader, my stomach felt really sick because I just realized that I have probably breached this account, and this feeling was really bad. Luckily, I think I was maybe a few $100 away from breaching, so I was lucky in that regard. This is the problem that you're going to face when you're swing trading on these prop firms that have this daily loss rule where they take into the account the higher of the day equity. You could be in profit, you haven't lost, but they count your profit as what you're losing. So now if this position reverses on you in that day, let's say I was up like 4% on the day and I didn't take it off because I want to keep the position moving, and this position reverses and it goes a bit here, I've already breached the account, which is crazy. As a swing trader, you got to be very careful with that. I thought I was being smart by risking my 2% because I don't get a lot of trades, and when I do pick the trades, I combine a whole lot of things. I use the COT data now. My trades are very high probability. When I take a trade, I need to compensate for the fact that I haven't been taking a lot of trades, so I risk a bit more. And if you think about it, in terms of risk between me and a day trader, my risk is not that much because a day trader might take 5 positions a week, risking 1%. Overall, 5% risk for the week. I might only take 1 position and I'm risking 2%. So if I lose, my max exposure is only 2%. That's the way you've always got to see it when you see someone's risk. You've got to also look at what is the frequency. But the problem is with these types of prop firms where they've got this daily loss rule and it's based on equity, is it's very hard as a swing trader to risk 2%. Because you could be up 1.5 R, for example. In this case, it would be like 1.5 R, which is equivalent to 3%. You'd be up 3% for that day. And then if it reverses on you, you've lost this 3% plus this 2%, which is 5, and now you've lost. But you've technically only lost 2%. So you've got to be very careful with this. There is one rule that in a lot of prop firms I actually would have breached, which is that the take profit or the stop loss being hit at news. A lot of prop firms have this rule where you can't trade during news, so you can't enter positions, but you also can't exit positions during the news. If this wasn't Blueberry funded, in most cases I probably would have broken a rule right here because it would have activated. Or what I would have had to do is take off my break even, take off my stop loss, and wait until 2 minutes or however long most of these firms say after the news. And by the time I would have come out of this position, let's see, 5 minutes, I probably would have had to come out something like here. And if you look at that, I would have broken the rule irregardless. In another account, that would have increased. It would have been 89 pips versus the 39. So if you look at this candle, this NFP candle, this was a crazy candle. It was about 113 pip move, which is insane. And that's why I didn't take that into account, because this was a massive candle. And also, I didn't think that NFP was going to be bad for me, which is something I've learned. I looked at the ADP data, which happened the day before, and this is what caused this candle to go down like this. And the ADP data, which is basically the private sector business data, was minus 33K. And they were expecting 90,000 jobs or something like that, and it was actually minus 33. So it was crazy. So I was expecting NFP to be really, really low, and it actually was like 140,000 compared to the forecast of like 111. So that's why this thing shot up, because it was such a surprise. And I think the ADP number being negative, I think that was the first time that it's been negative since like 2023. In most cases, I would have actually breached the account on so many levels here. I think I'm actually really, really lucky that I didn't breach my account. And the only thing that kind of kept me in the game is that luckily with Blueberry Funded, they have the 6-hour rule for news. So shout out to them, because they have this rule where as long as you entered your position 6 hours before the news, 6 hours plus, it doesn't matter if you hit your stop loss or your take profit, because you entered your position way earlier. Had I entered in an hour before, 2 hours before, I would have breached. But because they have this 6-hour rule, I was very lucky. Shout out to them, because that's a really nice rule and it makes it a lot more swing trader friendly. If you guys want to do a challenge with them, you can find a discount code in my description as well. Going forward, I'm probably going to be day trading with firms that have these equity rules, because swing trading makes it a lot harder. You can be up on the day and then it can reverse on you, and suddenly you're at max daily loss, even though you technically weren't, but because of the equity you were. So I'm probably just going to be day trading these firms, or if I am going to swing trade, I'm going to drop my risk. This was quite a scary situation for me. A little bit of a rookie mistake. I probably should have just closed before the news, especially something like NFP. Usually I do, but this was just a freak event. I just wanted to show that we make mistakes and it's all about learning from them. Let me know in the comments, guys, if you've ever had any freak NFP events, and I'll see you in the next video.